All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for April 21st, 2022. I want to follow up on yesterday's Auto Framer Sniper, the brand new report that we talked about. And in the video from April 20th, we spent some time looking at Microsoft, which was interesting because it was an excellent trade based on its location compared to the 10-day high. It had a small range and a long move to the 10-day high, which makes it a great auto framer because a breakout from the small daily range has plenty of room to move back towards fair value at the 10-day high. So that makes it a good auto framer. By the same token, it also had a very small range compared to its average range, which means that no matter where it's located, a breakout in either direction could have a very favorable reward to risk. So you compare a range stat move to the size of that range, and then you compute that as a ratio. And that gives you the idea of how tightly coiled is that spring. And Microsoft stood out as being a very good auto framer and a squeeze play or coiled spring. So we used that report from yesterday to shape that out. So this is the follow through trade on Microsoft. Since I spent all that time talking about it, I figured I might as well do something about it. And this is what transpired today. So the first thing, number one, the size of this pink box right here, or that red box, that is the range stat divided by 6. And I talked about that yesterday, why that is an interesting number to know. And it turned out to be about $1.50. So this reddish box is $1.50 of MMRB. And then this is where the market was going to open. So I had all of this data available to look at. So I just looked at it by inspection and said, hey, this great big blue box looks like a visual noise box MMRB. That's what it looks like when there is no directional move at all. And it's just the algorithms trading back and forth at the end of the day where there's no directionality. So the size of that blue box is about 50 cents. So almost about 1/3 of the size of the range stat divided by 6. So I noticed that at the open with lots of volume, we had the market moved up quickly. It moved one of these blue boxes off the low of the day. And I waited for a breakout at 4, which was a resistance line from the previous day, which triggered my entry. I was waiting to see it break out north of that. My reasoning was that if it got north of that line, then it was leaving behind all of this congestion, all of this resistance, that until it broke out north of 4, it was still just going to be in the noise. So while it moved this 50-cent MMRB off the opening, that was so close to resistance that I didn't want to enter here and then immediately see it reverse and start chopping. I said, let me see it break above this local maximum and then I'll get in. So it did. It blew right through that. So I took a mechanical entry, if you will. I was committed to taking it just on that reason. And then what I said was the price that would get me out of this trade, in other words, the price that would invalidate the hypothesis, would be a new low of the day. So it would have to go below the opening. So this turns out to be the MMRB that I actually used after the opening and the up move. And I was simply using the low of the day as the price that invalidates the hypothesis. And so this yellow box turns out to be about $1. So it's halfway between the visual noise box MMRB and the range stat divided by 6 MMRB. So I just took the middle and it's $1. So I bought it here at about 290 with about $1 worth of risk. And then that would have triggered a stop and reverse because a violation below that red line would leave behind all of that resistance. And now that feels like this could be a big downward move. And Microsoft was so far away from the 10-day high, which we knew because it was a great auto framer, then it would not be unreasonable if we saw that trigger a great big down move. So that was the trade frame I constructed and how I got to picking $1 as the risk box. Now that information was all available before the open because all this stuff was available and I could see that as the resistance line. So I was committed to getting in if it went above 290. So that thing, all it did was just move straight up. Sometimes good things happen to bad people. It had a risk box off the top. By the time I exited at the red line, I was committed at that point to getting out at this red line when it made this nice run up, because this was about 2.5R, almost 3R in hand. And so when it gave me a 1, 2, 3, I thought about getting out right here on the 1, 2, 3 exit. But I said, this thing's still working and it's early days and the market was going up. So I said, just I will risk one big yellow box. And then I said, I don't like that. I'll take this stop, which is like about a 4-bar low. I give it that much room. And then there was a gap in trading, sometimes it'll happen. The next print was here. There was a little gap down. And so I ended up giving back a full R, but I was able to keep 1R, 2R, and then exited routinely at 5. And so that was a 2R trade in Microsoft, all set up by the fact that it was in a critical state as a auto framer and as a squeeze play. And I simply used the range stat divided by 6, the visual risk box, and then a situational box that made more sense to me because of what looked like resistance. So that is adjusting the frame to fit the local conditions, to fit the context. So that was a 2R. Now, what's interesting is that the whole rest of the day in Microsoft looked like this. So this box here was the trade I just showed you. It gets long here, ends up selling here. So that's about a 2R. And then all of these yellow dots are places where TC2000 has given me alerts for standard patterns. Collapsing dragon, owl, collapsing dragon off that low, collapsing dragon off of this low. This is a collapsing dragon off of here. Another collapsing dragon, collapsing dragon. All of these are entries on the basis of support breaking. When it breaks, it breaks. And that's the beauty of the collapsing dragon. you get this trade, this trade, this trade, this trade, this trade, and each trade just sort of reinforces the downward pressure that we're seeing. The other part of this that's always useful is when you take a look at the support that held from the previous day and you just draw that over, that tells you that this one was the important signal, that if nothing else happened, when it breaks below the previous day's support level, that's the one that you got to crush and be good on that one. Okay. This was a quiz that I put in the in Patreon, and you can read the text, but it basically says that when you're trying to create new traps to feed the tribe, you're going to try to trap some animals for food and some fur. One of the things that you can do is just take a look at typical moves that you see a lot, and then see what you see, describe what you're seeing, and then bring the little templates of your standard work and put that into action and start arraying it and see, is there something in the way that you have your standard work that allows you to begin developing a standard play or a standard piece of work. So I see this every day. Every day you see this. Now you also see it after earnings announcements. This could be hourly or daily charts, but you typically will see this as the gap, and the thing runs up and then can't hold, and then spends a considerable portion retracing, but it hasn't completely gone all the way back to yesterday's close. There's still something like a 50% retracement in there. So when I take a look at this and I start describing what I see and putting my standard lens on it, this is what I see instantly. What I see are standard visual risk box from the previous day's close. I see the size of the run up. I notice as soon as it can't make a new high again, I just hang that risk box off the top. And then that's typically where TC2000 is going to give me a reversal signal on a retracement from the high of the day towards, I immediately just set up a 50% retracement. I take this line here from the gap to the high of the day, cut it in half, and that's where I come up with this as a target. And so it doesn't surprise me when I see this thing sell off and achieve that critical state. And then it also doesn't surprise me when I see hesitation in here, because now all of the guys who bought the gap up and preserve some profit, they see it stabilize, and now they're thinking, hey, is this going to be the move that gives me this and retest the previous high? And if it does, that could be another leg up. Or is this going to be the one where it fails and comes back to completely erase the entire gap? I don't know, but there is a reasonable move available in both directions with a very small noise box, and I can establish some kind of even a 50% move inside there is a trade worth taking. Like if I get the breakout from here and then it starts to pull back, I can cash that and make about 2 to 3R. It might just keep going through there, and then that's going to be a great trade. And even after the pullback, if it resumes, I might be able to get a second leg up. So there's plenty of room for me to trade from the critical state back to the previous test. By the same token, if this collapses, it could collapse all the way down. It might go all the way down here. And if that happens, it's usually faster than the move up because it's fear and depression. But even a trade that comes halfway down and then starts to retrace, I would cash that one and be happy with 2R. And then it might be another second leg down collapsing dragon. Or it might just come right back up into the critical state for the next round of framing. I don't know. Could be any of those. So this little trade frame here is another one of our standard patterns, the Z3P or the super pinch. If the regression lines had rolled over, it probably did because of the size of the gap, but that's at least going to be a Z3P, and it's a critical state because it has failed to fail and it has failed to follow through, and the range is tiny. So when I'm in that, about 15 minutes later, it gives me the signal when it breaks out of this this range box, and it gives me the signal. And then my standard pattern would be, oh yeah, I'll take half of that box as my risk, my execution risk, and I'm going to move my stop to no lose plus dinner for 2 as soon as it's fallen that far. And now it's a science project. Is it going to come all the way down to close the gap? Or how much money am I going to get inside that trade? I don't know. So this is how I think about developing new systems. When I see large trade patterns a lot, and I start trying to get my little toolbox of standard practices and start dropping it on there. So now if I want to develop this into a system, then I have to see what's the frequency that this kind of a move occurs. How large are the moves? How narrow are the risk boxes? How many times a week do I see it? That kind of stuff. Is it happen only in bull markets or bear markets or volatile markets, or, so I have to check it against market conditions as well. But generally speaking, all of the trades that start from a narrowly compressed range and then are playing breakouts in either directions, you're pretty much going to see those in every market condition anyway. So that's got a certain amount of opportunity already baked into the cake. So now what I'm interested in is making sure that I know how big the gap as a percentage is on all of my usual suspects, because simply the size of the gap itself makes it interesting. Why? Because there was this much news overnight, or it changed that much, that as soon as the market opened, there was a dramatic difference in what the fair value was. That means that this thing is in play, and that everybody that was short has got some explaining to do, and everybody that wants to get long is got some buy-in to do. And until this thing stabilizes, like over in here, it's really in play. So this becomes the basis for a standard strategy for an abnormal condition. The abnormal condition is the large gap, which could not sustain and started to fail. As soon as it started making a new low of the day, that was sort of the tell that there was a downward move readily at hand. Plus the fact that we knew that Microsoft had some problems anyway. So that's what that quiz on Patreon was talking about today, and some of the charts and how to think about finding an edge that you haven't been exploiting yet. I looked at this, I know how to do that. So I start putting my standard templates on there to see if my intuition checks out once I get my carpenter square put on that thing, right? So that was a quick lesson for today. yeah, the final move on that thing was after that sideways and then the breakdown. It didn't quite come all the way back, but there was still another significant leg down. That leg looks very much like that leg, doesn't it? There's a symmetry in the size of those moves. So a directional move of one length and size implies another one. So that you can think of that as leg one, pause, leg two, which makes that a really important signal to take. Okay. Back to work. So today, yesterday's tiny little doji that closed well, resting on top of the dragon, that was Tesla. Well, the first one was Microsoft. That last one that we just did was a 1 minute chart on Tesla. Had a huge gap up to 1076 and then got smoked the rest of the day. It didn't have to be Tesla. It could have been anything on our stack of normal tradables, which are all liquid and volatile. So what we got was a gap up in the market. It could only barely go a little bit higher and then spent the rest of the day just getting smoked and coming and dropping down. Now, what we said yesterday was that this was a perfect critical state, and so we should be very, very alert to a breakdown below the Bollinger Band mean and below the low of the day. And so when that happened, that implies this kind of a move, which takes it right back vicinity the RL10. And it closed poorly. So now going into tomorrow, anything below today's low of the day is so close to breaking through the 10-day low that the next target's going to be this cluster over here around Z2. So any violation this way has a potential for a large move south, a 4% sell-off, which is significant because they're already almost at 9% off the swing high, which is north of this. So today's price action, which was a big sell-off and a very poor close, was not a happy day at all for the long side. But it's a perfect example of what a sideways market will do. It teases you with a couple days up and then smacks down with one big down day. And the reason, therefore, that I love the collapsing dragon is because downside moves happen quick, fast, and in a hurry. Whereas the up moves are battling indecision and lack of confidence. Everybody recognizes fear. So the downside moves are asymmetrical. They are large, sharp sell-offs. So I was well prepared for that one today. And the trigger was that. And now this is the next trigger. What's it going to do? Is it going to bounce from oversold conditions? It could. It could also collapse from oversold conditions and a breakdown of the RL10. You know, this is, like I said, that's the next support level. So we'll be ready for that. All right. So today in the indexes, the S&P was off 1.5%. The two that were stronger was diamonds at minus 1.1. Treasuries were off 0.74. Still above 120, but just barely. Notice how so many things are in the daily winter. Just everything getting smoked. We had emerging markets underperformed at 1.9, the Qs at minus 2.07, and the Russell was the worst performer of our big six indexes at minus 2.25. All right, let's take a look at the all of the underperformers. All right, finance, materials, and tech underperformed. Mexico minus 2%. Brazil, marijuana, the FANGs energy blockchain down to 3.2. Lithium, Ethereum, moonshots, global future of finance, biotech, oil exploration, ARC genomics and innovation minus 5%. Wheat and precious metal 5%. Clean energy 5.5%. And then a lot of individual targets that just got murdered. Alcoa off 17%. Do you think Alcoa is going to be in play tomorrow? Yes, it will. This is what made Alcoa such an amazing trade today, was that the gap down was large, but that was only the beginning of the selling, and that was the high of the day, and the rest of the day was just murderous. And let's see if we find that rascal. Yeah. So after the big gap, this was just pure gravy. This whole trade, that whole trade sequence to there was just excellent. But now the next interesting thing is that sort of feels like the new correct fair value. They were willing to hold that price overnight. Are there going to be a bunch of people that get chased out of this after they see it down 17%? It would not be surprising to see a big gap down tomorrow, which then reverses with everybody getting after it. You get to buy Alcoa on a 30% sell. Why not? So tomorrow morning, one of my 3 highest priorities is going to be Alcoa with the WMB3. And the least surprising move would be to see a big gap down like we saw here. But instead of a sell-off, it would be something like a morning hook that would then take it back up. That would be unsurprising, if I were to use today's gap down as an example. So I'll be trading Alcoa as one of my top 3 priorities tomorrow. So if you think that I pay attention to the size of the gaps in the mornings, you would be correct. I know as soon as they open, based on the way I have my little table set out here, the bigger the gap, the further down the stack that it goes. And I always like those because they're a sign of panic and fear. And that's a reliable indicator of a emotional trade beginning to happen. Rivian off 7%, Coinbase, US Steel, Squarespace, and PayPal. So a lot of those global future of finance guys are getting smoked, 6%. Devon Energy off 5 1/3. Cliff Natural Resource. So there's a lot of the metals that got murdered. Alcoa, US Steel, Cliff. It's surprising that XLB did not lose more, but it lost quite a bit. So all of the steels will be in play. I just don't know what direction they're going to be. And then Microsoft ended up being down 2% after that nice initial surge to the upside that gave too hard, spent the rest of the day just getting slaughtered. All right, let's take a look at the symbols or the sectors first that worked. Simon Property Group and Wood only off 1.3 and 1.16. Consumer discretionary off 1%. The other lumber 0.5. Agriculture and blended commodities and S&P staples only off 0.09. So staples continuing to retain their relative strength compared to consumer discretionary. Bitcoin flat. Oil up 1.1. Blended large cap crypto 1.5. VXX 1.9. And then Tesla was up 3.25 to close above 1,000. But what's important to note is that where was it? Yeah, this was the Tesla chart today. Huge gap up from like 998 to 10.7, and it ran up to about 1080, and then spent the rest of the day getting slaughtered. And then it ended up 3% for the day. But it was up an awful lot more and gave all of that back. So that is still a very fragile move. And if this little thing sells off and starts going below this long consolidation area, then this thing could go to 950 tomorrow in a hurry. So Tesla is one of my top 3 priorities simply because of the magnitude of the trade in both directions. Huge gap up shows a lot of longer term residual buying pressure, and then the traders being able to smash that down and get the short side means that there's guys interested with lots of money on both sides of the trade. This almost feels like the professionals trapping all the Tesla bears, the little baby or the little bear cubs that are excited and happy, baby bulls, if you will. And this just feels like they trapped them and took him to the slaughterhouse. Just a quick look at that little sniper report from yesterday, updated for today. The things that I'm interested in would be these at the top. I've sorted it by reward to risk ratio. So Travelers, Disney, Salesforce, Merck, and Microsoft. So Microsoft no longer at the top of the stack. It's still 1.0 on reward to risk and a 1.2 on the squeeze play. So that's still of interest. Walmart is going to be of interest to me, even though the reward to risk is 0 on the reward to risk, meaning it's close to its 10-day high. The fact that it's a 2.0 on its range stat divided by risk says that it's a really tight compression. And therefore, I'm going to be interested in playing Walmart tomorrow. So my top 3 ideas for tomorrow are going to be Tesla, Alcoa, Microsoft, and then the 4th one is Walmart, as far as opportunity trades are concerned. Okay. I really like that new report, I must say. Um, It's my boss sent me my annual appraisal today, and I had my annual counseling in which we both agreed in the first minute that it was kind of a waste of time because I don't really pay attention to anything the Army tells me to do if I don't want to do it. But he's happy with what I'm doing, so we just agree to. I'll keep him informed if I ever do anything that the Army's really not going to like. Then I'll give him a chance to fire me before it gets dangerous. It seems to be fair. All right, so we are back into bearish normal conditions because of today's little sell-off, getting smashed on the 2 and the 10-day, even brought the 90 and the 30 back into weakness. Oversold conditions. Latin America on a channeling pop, ready to pop. Walmart, 3M, Verizon, Walgreens, and Coca-Cola on the min paints. Max Pains, Tesla, Microsoft, Nucor Steel. I should add Disney in there as well. Disney and Pfizer. Those are all going to be very interesting. PayPal, Netflix still hemorrhaging from all pores. Nvidia, Facebook. There's some good high flying names that are in play, that a lot of pain and suffering that are very, very tradable. We're very close to the zero line here. Risk Z is at 0.1. So this is a critical state. Is it a rebound or is it a collapse? What did it do here and here, the last two nearest neighbors? Big harsh sell-off twice. So just saying. In the Dow Tactical, just a couple favorable auto framers. Pfizer is interesting. It is a channeling and overreaction, a 5DD and 5-to-1 on the reward to risk ratio. You have to go frame that one. You have to. 4 auto framers in the ETFs. Treasuries is now 4-to-1 instead of 10-to-1, so not quite as good a deal. Emerging markets at 2.9. I would be looking to get short clean energy at the first sign of weakness. Bearish market, so this is going to favor the intraday trading, and then any of these symbols that are failures, in other words, they fail below their previous low or their daily low today, is going to be an automatic short. So Alcoa, Travelers, and Disney, if you see weakness in those, you just pile onto the short side. Same with Pfizer, emerging markets, and treasuries. The sniper report. I've got this sorted by the oops, let me get to by the reward to risk ratio column here. And so Travelers is of interest because it's pretty good on both the auto framer and the range compression, the coiled spring. And again, the range stat minus or divided by 6 is an interesting way to start the computation of your MMRB. A lot more symbols in the fall and winter now with today's little sell-off, including a lot of key tech names in here. Lots of tech names in the winter. These are all consumer staples. Oil, one of the lone survivors. Otherwise, man, you can see just how broad-based the pain and suffering has been. I would just draw your attention to these two defensive plays. U.S. real estate and consumer staples are holding up better than just about anything else. That was a big rejection. It looks like a giant fang on a dragon's mouth. You know, he opened his jaw. There's his head, opened his jaws, and they got the fangs today. Oh man, sure did. Getting ready to test a key support level here at the bottom of the river. Now let's take a look at the traders. All right, this is Michael. And we're looking at the Euro ESD. Five-minute. He's noted the previous day high, previous day low as sort of the breakout box for trading. Strategy for the morning: go long or short, test of the previous high or low of the day. Starts trading here. Notices a quick PSAR flip and go, Z3 pinch breakout, standard risk box. Cash is half for 4. When this rolled over, he cashes 4. Cash is fine at 5. This group at 5.5 R. It continues to trade. He had thought the move was over. Question: should I move the stop to 1 bar low after a big move? I like that. This would have probably kept you in a little bit longer on the second half. I don't mind getting paid 4.5 on the first position or 4 on the first position, especially when that started rolling over. Yeah, that's already a Z3 breakout. And what, were you going to let it come back all the way to here? Then you would be regretting that exit. No, I think take half and then tighten up, and then that 1 bar low keeps you in, keeps going. That's a good looking trade. It probably ends up with about 5.25. Good problem to have. Here's Tim. What I'm going to ask him to do is take a look at, on the S&P, even though you're on the 1 minute, you got to take a look at the previous day's low. So I'm drawing that right here. Right. This tell is an important one. And I'm pleased to see that you gave it another try, as the low of the day was broken and the previous day's support level was broken. And then that gives you this one. So knowing where those support levels are really important, because when they break hard like it did in here. Support, PSAR flip, got paid. Re-entry might have been a little slow. He was waiting for it to break out of the Z3P. Where you got it was the break out of the dragon. But I'm not going to fault you on that one. I mean, You could also have gotten it here when it crosses the RL 270. Still, that's pretty good. The important thing was you got paid and it was a strong exit. Fractional loss, fractional loss. Oh, I guess this one was this. Scratch, scratch, sorry. Scratch, scratch. This is where this should have been. You took this one, that fractional loss, fractional gain, scratch. So that's probably the lunch crowd. Not much room there. Got paid, gave it back, some micro trades, and now you got paid nice. A quick cash. This is where I want you to get immediately on the collapsing dragon, right? Because this is where you're going to get short here anyway. When this thing has already fallen harshly like this, and you have a little one, but it kicks you out, you got to get right back in here, but then not later than there, right? But you will. I like to see you capture that little piece of the move in here. Trust the collapsing dragon. That's the one that does not hesitate. Okay. Griff's combined template for the three primary trade patterns of the foundations yields 2.16% today on a day when Brazil was down, and all his markups are correct. And just he's taking micro losses and getting paid big when it works. So his rules and his discipline are excellent. He's getting the most of the big moves in his favor, and he's not sticking around for the ones that are not. So over the long run, that's the winning play. Luke brings home 3. Good scratch. Good collapsing dragon. Might have thought about a second position, but still, this is a good exit. Good stop and reverse. Good exit. Good effort. Good effort. This is we gave back way too much on this one. I think you were looking at this turning point, said surely that's got to work. No, it doesn't. So I think that should have been a scratch instead of -0.5. And then you were slow getting back in, and then this should have at least been a scratch instead of a minus. But good reentry, and then gave back way too much. We gave back 3/4 of the move. This is what you captured. We gave back 1, 2, 3. So we want to keep, we want to try to maybe get out in here somewhere, or just get an extra box. Keep half instead of a quarter. Great reentry, just in time to give back a little piece. Good patience. This happened pretty quick, I think, except that is like 5 minutes and then all the way down to here. So maybe keep half. On a Z3 excursion, just take especially a big bar pushed up through the Z3, keep half, exit here instead of here. Then that might have given you this entry instead of that entry. It still pays off a little bit. Still 3 is pretty good. It might have been 4, but there was not much wasted energy in there. The only thing I might have said was here as a possible second one. Then you could have kept it a lot more of that. Then you had to have been more aggressive. Glenn's trade frames. So that's the weekly move, the breakout risk box, about $3. That's going to about 88. So that's about $13 divided by 3. It's about 4-1 to the upside. And then if this whole thing collapses, there's no support in here till you get down to about 60. So that's about a $12 move on a $3 stop. That's also 4-1. So that's a Ford banger in both directions. That's pretty good. You can see just how aggressive that selling in Alcoa was. And what I want to show you is that the gap down opening was here. So that triggers the alert. And then if you just use standard hybrid frog, whew, big mover. The hybrid frog to the downside on our little frog champions like Alcoa and Brazil and Cliff and Devon Energy. Those downside moves are lucrative. Facebook. The big sell-off on the weekly that had one rebound, but now has come all the way back down into this. Ready to break. What you really want to see is that break twice, so you get two positions in. The upside, a second and a third position there are all justified by market's money. And then you're hoping to see halfway up the stack and then all the way to the Bollinger Band mean. 2 harsh days in a row of selling that closed poorly. So yeah, you want to be ready to go short on that thing at a moment's notice. That is not much conviction at the end of the day. So the downside is, and I would almost be right here. Like if it started failing right away, I'd probably use maybe a $1 or a $2 risk, maybe a $2 risk instead of the full $4, because I want to have a nice position size when that starts failing. The upside's easy to see. XLC Communications. Yeah, this little bear market that we're in has really put a lot of good companies at a great deal of risk. Look at this 2-day sell-off that went from 66.5 down to 62 and is poised at the bottom of its breakdown range. Oof. Crush that thing to the downside. The upside is easy to see, but man, I think you want to be ready to exploit the downside carefully. Bristol Myers Squibb in the healthcare and farms area. On the weekly, when it broke north of this, that was the tell. That's your next leg up. That's leg 1, leg 2, and nice range compression. It's ready to keep going. That's not much of a sell off at all. And a continuation pattern should be bought immediately. We're already at the top of the stack and ready to go. The breakdown, I might go from 77 and 3/4. But I also respect the fact that this thing has been so strong that maybe you want to see that extra piece of failure, because now you're willing to give it that much in order you can still get 3-1 to the downside. If you wait for this to get short here and then put your stop here instead of all the way there, this is one where I would take half the risk. I would let it fail through this red line, but then instead of taking the full box, I would take half the box so that you could get twice the position size for the same dollars at risk. Newmont Mining, defensive plays. I love this one. If this market goes into the bear, then Newmont Mining should do well. And that was just a 1-day smash. So you're ready for a recovery or a further collapse with a second position here if it breaks below the collapsing dragon, or second position here based on about 3R in hand. Boy, I like that one. That's nice. Mitch, which is a Match Group Inc. Don't know these guys. Just gloom and terror and despair. Fail. More fail. Just nothing good in sight anywhere. Go strip meat off the carcass. If you get long this thing, it has to be only intraday. And get paid. Do not stick around or believe it. This is the Walking Dead. Stay away from that one on the long side. Good Lord. All right. I think let me check one last time here. See if we got anything. Nope, looks like it. All right. Good work today, folks. Awesome job. Learn those lessons. Learn to see. Build your standard trade framing templates. Read that quiz that I posted today in Patreon, and to think about life like a trapper or a hunter or a farmer or a brickmaker or a gold miner, whatever your trading metaphor is. Every one of those metaphors relies on simple, effective tools that are used properly. So learn to develop those eyes so you can develop strategies that you are satisfied with. And we shall see you tomorrow.